Hello, everybody. Welcome to today's episode of the Daily Dose. Today is Monday, October 31st. So happy Halloween to everyone watching and listening today. But I do want to talk about the markets today and what we have ahead of us this week because there is a lot of data coming out this week. We have the jobs numbers coming out this week. We have a lot of earnings reports. I believe about a third of the S&P 500 will be reporting earnings this week. And of course, on Wednesday, we have the FOMC, which we'll see what the Fed is going to do as far as rate hikes and what their outlook is for the next couple months as well. And that'll be really important as we are probably nearing the end of the 75 basis point hikes, and they'll probably start slowing those down soon, or we'll see on Wednesday. But as for today, the S&P 500 was down about 0.75%. The NASDAQ was down just over 1%, and the Dow was down 0.39%. So the Federal Reserve's next policy announcement Wednesday and October's monthly employment report set for release Friday will determine whether the tailwind will continue pushing stocks forward through the rest of 2022. So the market is still expecting a 75 basis point hike. And I think at this point what they're expecting is for the Fed to come out and basically hike rates by 75 basis points and then have more of a dovish tone than they have. So they're still going to talk about how they're committed to fighting inflation and bringing it down. But what the market is expecting is for them to start saying, okay, we see that inflation is maybe starting to slow down and we're ready to start to slow down the rate of our hikes. And I think that's what the market's expecting. JP Morgan released all scenarios of what could happen and what they expect the market to do in that scenario. And the most extreme as far as pivoting goes was that they would raise rates by 50 basis points and have a dovish tone to their speech, and to which they expected the S&P 500 to be up between 10 and 12% if that happens. Obviously, that's an unlikely scenario. And then the worst case scenario for markets would be if they had a 100 basis point hike, if jobs remain strong and inflation is still stickier than expected or higher than expected. They said there would be a 100 basis point hike and a hawkish tone, that they would say that they're committed to fighting inflation or would raise rates to wherever they need to be. And in that case, they expected the market to be down between 6 and 8%. And that's another unlikely scenario. So what the market's really expecting right now is that 75 basis point hike and a little bit of a softer tone as far as slowing down the rate of their hikes. But still committed to fighting inflation and getting it down. So that's where we're at for the FOMC. And this week, obviously, there's a lot of earnings still to come out as well. The big companies reported already last week, but there's still just a huge amount of companies that need to report. So the S&P 500 sitting on this resistance right now. We're right below 3,900. We're at 3,871. That's where we closed. We touched the 3,895 and bounced off, so we're kind of just rolling over at this resistance, kind of just sitting and waiting for the data to come out. I wouldn't even be surprised if it was just a little bit choppy here. Maybe we go down again tomorrow or just stay some chop in here throughout Wednesday and Friday. I think we'll get a clear direction on Wednesday after the FOMC meeting, but for now, we're sitting right below this resistance right now. So let's take a look at Bitcoin. Bitcoin's doing the same thing. It's kind of slowing down. We're back below this zone now. We're just over 20,000. Again, Bitcoin's been in this range for like 5 months now, so there's really nothing new to report on Bitcoin. We're still between these two zones. And as long as we're above this zone and below here and the 28,000, then there's nothing really new on Bitcoin. So a lot of big news coming out this week. Obviously, Wednesday will be really big as far as what the Fed does. I'm definitely still expecting a 75 basis point hike. I don't think we'll get a 50 or a 100 this month. But what I will say is I do think that maybe the Fed will be more hawkish than people are expecting. I think people are expecting them to start having that dovish kind of talk in their speeches, and I think people are expecting them to kind of start talking about when they're going to pivot and maybe cut rates and where maybe the terminal rate will be. But I don't know if the Fed is ready to do that, especially with the jobs numbers as strong as they are. And if they're still strong this week, then I would definitely still expect the Fed to continue to be super hawkish. So maybe the market's not ready for that. Maybe we won't get that at all, but that's just what I'm expecting. But be sure to stay tuned for the Daily Dose episodes that will come out every day that the market is open this week. Be sure to subscribe on YouTube and follow wherever you listen to podcasts. And until next time, thank you for listening.